All right, welcome. This is Professor Milligan, and welcome to Wall Street Wednesday. Today is January 6, 2021. This is our first broadcast, first Wall Street Wednesday of 2021. So I welcome everybody. Pretty exciting what's going on in the market. Market's always exciting. I take that back. Pretty interesting what's going on Capitol Hill today. So I just want to acknowledge what's going on. Whether you're Democrat, Republican, care what it is that you are, the bottom line is this is not a good day for our democracy and for our country. So I just wanted to address that, and now I'm going to move on. So I'm having a question about BTC, which is Bitcoin update. So I was looking at that the other day. Hold on a second, I'm going to switch to a bigger chart. So do I have the right symbol? BTC, hold on a second. No, I don't want the stock. Is it the stock? I need the symbol for Bitcoin. What's the symbol? I pulled up something. I pulled up BTC and it didn't come up, so I'm looking. I know that's not it. That's blue sky. So I'm not sure what the symbol is. Give me the symbol for Bitcoin. I'll take a look at the chart. And I'm not sure if you want to look at the stock or the future or what. So just give me, not even the stock, but give me a symbol. So I'm pulling up the futures contract. Bear with me a second. Futures contract, front month. Let's see, switch it to a weekly. I had a question about Bitcoin. So let me address a couple of things. I'm looking at a chart of the futures on Bitcoin. Welcome, people. Welcome. All right, so I got it. So I'm looking at the futures on Bitcoin. Looks like it closed today just above 36,000. The one thing I would say to you guys, those who are in it, stay with it. Those who are looking to get in it, I'd avoid it right now. You got some gaps. You got a gap between 30,000 and looks like 33,000. There's a big gap there. There's another gap underneath that between looks like about 23,000, 27,000. So you got some gaps. Anybody who's ever done any type of technical analysis knows that when these things have this kind of run and move to the upside, if you're long, it's good. If you're short, you got squeezed. And typically when you see this kind of move to the upside like it is now, it usually looks like a short-term squeeze when it goes parabolic like this chart looks like. So I would be careful up here. For those of you who already have a profit in Bitcoin, what I would do, especially if you're trading the futures, I would actually buy a put up here at the 36,000 level. Use your profit to buy a put right at 36,000, lock in those profits. And again, if those who don't understand, if you buy a put here at 36,000, if the stock Bitcoin starts to pull back, that put's going to go up in value, which means it's going to hedge and lock in your profit. That's what I would do. For those of you who want to play it, if you want to play it to the downside, I would would not go short this. If anything, I would use puts or I'd use a synthetic hedge. Again, I don't have a problem with volatility just being on the right side of it. And the way this thing has moved from basically 22,000, the way it's moved, actually 19,000. And I'm looking at a weekly chart. So let me go to a daily chart, back it down. In my opinion, still hasn't changed. You got some big gaps in there. A gap in there between 24,000 and 27, like I said, and there's another gap between 27 and then 30, 31, 32. So I would buy those puts, and then from those puts, what I would do is I would to the downside. I'm not. So let me make sure we understand this. I'm not saying that Bitcoin is going to zero. I'm not saying that. I'm saying that when you have something that's run this much and goes parabolic, one of the things that you might want to do is there's going to be a pullback. It's just natural. In fact, for those of you who are long in this position, and plan on being long for a while, you want the pullback. The pullback is healthy. So there's going to be a pullback. Again, typically, if those who have done, technical analysis, you know that typically they're going to come back and fill those gaps unless there's some reason why the gap is there. So look for it to fill a gap. It could test the 24,000. If you want to be aggressive, do a synthetic and then hedge it. So synthetic would be buy the put. If you want to play it to the downside at the strike price of 36 and change, 36,000, buy the put at the same strike price, sell the call, collect that premium, and then buy a out of the money call around 38,000, I would say, or 37,000, somewhere around that range. Buy that call. That's a hedged bearish synthetic. That means you're playing Bitcoin to drop to the downside. Again, long term, I'm talking about short term backing and filling. All right, let me see what else. I got a question here on Shopify. Hold on a second. Haven't looked at Shopify in a while. Not since the IPO days, typically, but you know me. So just looking at this chart near term, there's a trading range between 1,100 and 900. So it's in that trading range. It broke out, went to a little above 1,200. Now it's pulled back to 1,100. If it breaks below this 1,100, look for it to test the $900 price. But right now you're at major support, near-term support. So right around here, this level between, actually looks like about 1050. Anything above 1050 is old trading range. If it breaks below 1050, you're in the old trading range, which again means you could test 900. Formed a nice base, had a little run up, pull back. So you just want to see if it holds. Again, Shopify, not a bad looking chart. Not a bad looking chart. Again, I'm looking at the weekly. I'm not looking at the daily. The daily is going to give you much more volatility. When I switch to the daily chart, you can see the choppiness here. But you can see that trading range. I said, again, between that 1,100 and that 900, huge trading range. And we've pulled back. We're close to being back into that old trading range. So I would say stay with it. But at the same time, if it does break below 1050, look for it to test 900. All right, let's see. Any other questions? Any other things going on? So let me talk about a couple things. One is yesterday. Let me pull up my charts. Yesterday, I believe that's the one. Nope. That's the one. Now, I had talked about this stock before we went on break. Still talking about it. And the stock is Upstart. It's an artificial intelligence company. Stock broke through. I want to say 48 was the number I was looking for, 49. I own the stock at $49 a share. I picked it up yesterday. Had a nice run. Had some run in it today again with some volume. Again, this market's kind of choppy on the as you guys know on Nasdaq side. Part of it is because people are taking profits. Part of it is Nasdaq took the hit today. It tried to fight back. But I'm long the stock. I expected more out of it. And again, it did run up to, I believe it was 56, 57 a day. So that's a stock that I went long. I went long yesterday. The other stock that I looked at and I did not go long. Repeat, did not, but I talked about it. And I don't know why I didn't buy it. It happened yesterday too. I don't know why I didn't buy it. And that is this HYFM. It's a marijuana company out of Canada. Went public a couple of weeks ago, and I thought it was going to run. It did run. I did not buy it. Repeat, did not buy it. Sat there and watched it, and you can see it went through that 57, 58 number and then ran up to 67, I believe was the high. So those are some stocks I talked about. And the other one I talked about, which some of you might remember, was Content Logic, symbols WISH, W-I-S-H. Well, WISH went public at $24 a share, opened up below $24 a share. As I told you guys, anytime a stock opens up below its IPO price, it's a short. Either buy the put, short the stock. The hardest part about shorting these stocks is actually finding stock to borrow. Too short, But as you can see, Wish it did go up there and test the 24. And again, when it did, I said stay short. And you can see the stock went over the next couple of weeks, traded down as low as a little above $17 a share. So not a bad trade there. It's trying to fight back here. You're having some bounce. I'm not sure if I would short it again here. It looks like they're trying to run it, and they're running it off a low volume. But again, I don't have a lot of faith in the company, so I think you're fine. I think you're fine long term if you stay short. If you took profits on it, if you locked in your profits, good for you. Now, one of the things I want to say is one of their competitors, I can't remember who, is actually coming to the marketplace with their IPO in the next couple of weeks. They've said that based on the success that Wish had with their IPO, they're going to go public too. I'm not sure if you call it success when you price a deal at 24 and it's trading right now below that offering price. But again, that's what they're saying and that's what they're looking for. All right, let's see what else. Those are the stocks I had that I wanted to talk about. Let me get out of this. I'm not sure. Any other questions? Close that. Come on. All right, cool. So that's what I wanted to talk about. Now, one of the things I did want to add to is over the break, and I'm still working on it now, I'm putting together what I call the ProfessorMilligan membership. And my partners and I are putting it together. It's something that you guys can buy into where you become a member. And in this membership, what happens is I literally will explain to you exactly what trades I'm doing as I'm doing them. You'll be getting the same information as I'm doing the trade. You won't have to wait till Wall Street Wednesday to hear anything about it. Paul, give me 1 second on PLTR. I'll get to it. So I'm putting that together with my partners. Pretty excited about it. There'll be videos. There'll be conference calls. There'll be times when I'll be giving you guys information on the companies and what we're doing, what we're looking at. And it won't just be stocks. I'll also be talking about commodities, hedge synthetics. For those who followed me and saw this earlier this year, earlier last year, actually around the beginning of summer, I was pounding the table on corn. I told you I was buying corn at $3.20, $3.20, $3.25. And the deal is that I did take a position in corn. Of course, as I told you, my timing was off, so I ended up getting stopped out of corn. And after I got out of corn, of course, which I stayed bullish and I didn't go back, I got busy with other things, corn that now hit $5 a share. Now, you might think that's not a big move, but I'm taking out my calculator, so I want you to understand this. For every penny move in corn, it's $50. So if we went from 340, let's say 320, 340 to $5 is what, $1.60. So that's 160 pennies, quote unquote. 160 pennies. No, it's more than 160 pennies. Jeez, my math is off. But anyway, that's $50 per penny. So move from $3.40 to $5 is a major move. Missed it. My position would have probably quadrupled, but I missed it. All right. Now, Paul asked about PLTR, Palantir, excuse me. So I'm looking at the chart on Palantir. I'm still long Palantir, but again, I'm long Palantir because I own it down here $11, $12 a share. I'm not sure, again, how much you guys are into technical analysis, but Palantir, I'm just thinking the name. Palantir formed what we call a triangle, and it had lower highs and higher lows form the triangle. Typically, when you see these type of triangles, they're neither bullish nor bearish, but when they do break out, they typically break either to the upside or downside. You can't tell if it's bullish or bearish. So anyway, it formed that triangle. It broke out. It tried to test up to that $30 level, 29, and then it's pulled back and formed a nice support here, $23, $24 a share. Again, I'm still long because of the price I own it at. It's a longer term hold. With that said, though, let me say this to you, Paul. If my money runs tight and something else comes along that I want to jump on, I will take my profits and move on. Right now, the stock hasn't shown me a reason to actually get out. It's at a nice support level, so I'll stay with it a bit longer. But again, for all you guys, and this is me, I do not like you. I do not have unlimited cash. I do not have unlimited cash. So one of the things I say when it comes to trading is printing black ink is always a positive. So if you have a position that you're not sure, if you're a little nervous, or if you just want to put some money in your pocket, take the profit and go. I am still long PLTR. It's a long-term hold. But again, I do not have unlimited cash. And if I see something else moving and I need to raise some cash, I will jump out of this or anything else I own and move into something else when I need more cash. And as some of you guys know, we had talked, I had kept a lot of cash. I kept some cash on the sidelines because I knew that I was going to look to actually buy Upstart if it actually broke through, and some other stocks. The other one that did not break through is Sear. Sear, again, Sear, it's a biotech, had a big run the first 4 days, 5 days. It pushed from basically opening of $47.50 all the way up to basically a little over $80. And now it's back down to somewhere in the $50 range, $55, $56, $57. So again, did not work well. All right, now, so those are the stocks that I'm working. That's what I'm doing. Again, my partners and I have put together what we call our membership. We're pushing on that. It's going to allow you guys to actually see and hear us in real time, see what we're doing, see what we're buying, what we're selling, what we're trading, get our opinions, our thoughts, as well as in the membership I'll have time to actually do individual consulting work, as well as videotapes and other things that will show you in terms of strategies that we're doing. Now, before I forget, we are moving into earnings season. So do not forget earnings season. It's going to be very interesting with earnings seasons. And the reason why I say it's going to be interesting is you had a number of corporations that have lowered their numbers and their estimates. So there is a good chance they can beat it. The other thing that's going to be interesting is, as you guys know, the pandemic is not over. We do have a vaccine, but the pandemic is not over. Last I heard from Dr. Fauci, they think that we'll be back to pre-pandemic normal by the end of 2021. So winter quarter, final quarter, fourth quarter 2021, they think like we should be back to quote unquote normal. So it's going to be interesting what happens to some of these corporations. You know, some are doing extremely well during the pandemic and some have not done well at all. So that's where we're at. The other thing I want to say to you guys is I believe that there's going to be a tremendous amount of money to be made in the IPO market coming up this year. I think there's some opportunity there. And the thing I would say to you guys, those of you who really want to, be aggressive, I think the opportunity will be there. When I first started doing Wall Street Wednesday, I had a number of people say to me, I'll take a look at those in a second for you, Christian. I had a number of people say to me that, or when I said to a number of people, I said, look, it's possible for you to get 100% return on an individual stock. It's possible for you to get triple-digit returns on your portfolio. And I think that the IPO market and some of those recommendations that we did have shown just that. So heads up, be looking for it. Now, let's see. I had a question on, I don't even know the name of this company. So what is it? LTRPA. Whoa. So let me see if I can get the name of this first. Bear with me a second. Ham, what's going on? How are you? Andrew, what's going on? How are you? Happy New Year to all you guys. All right, let me just look at a little more chart. All right. Wow. And let me get the name of this company one more time. Liberty Trip Advisor Holding. Okay. Gotcha. All right. For those who want to know, I'm looking at a weekly chart. Stock going back to 2017 was as high as $24 a share. The last year, it's been between $2 and $4 a share. I'm going to switch to a daily chart now. Near term, there was a trading range. Wow, this thing is volatile. There was a trading range at $4. So it looked like once it hit $4, it would back off and pull. The low in the trading range was $1.70. Near term, you saw $4.39 pull back and then run a little bit. I think the reason why you're seeing the run on that is that a number of Wall Street analysts have come out and basically said that they feel like the airline industry is back. the way they would play it, they would not play the airline stocks. They would play something like TripAdvisor, what's the other one? Priceline, which is booking. They would play it that way. In fact, a number of them said they like other companies, but that's what they're saying to play. So technically it's not that, there's nothing attractive about it, but fundamentally there might be something going on here if you want to play the comeback of the airline industry. And then GME, GameStop. For those of you who know me for a while, who've been in my class, you know one of the things that I talk about all the time is, one of the stories I tell about is GameStop. So I'm looking at the chart. GameStop had a run. It basically bottomed out at $4 a share, and it's run over the last couple of weeks all the way up to $20, $22 a share. I'm not sure why the move is. And you guys know me, I'm always about the whys, right? Professor Milligan, it's always why. Why this, why that. But the stock basically ran from $6 a share, broke out and ran. Again, I'm not sure what's going on with GameStop. This has to be a corporate event, some type of fundamental event going on with the company, or some type of announcement. I don't know what it is. I'm looking at the chart. And Christian, you know me, this is not the kind of stock I would buy. In fact, one of the things I always talk about is GameStop has to redefine who they are, a new mission statement. The GameStop that you guys had when you were kids, where you could go in there and swap and trade CDs, and that's how they're making them, when that GameStop doesn't exist. So I'm not sure what they're doing now. I know they tried to do Cricket, which is a cell phone business. I know they also were buying used cell phones. I'm not sure what they settled in on. I also know that GameStop had a couple of activists that were heavily involved. It was interesting because at one point, GameStop was paying out a dividend while they were losing money. The activists had forced them into paying a dividend. As they paid out that dividend, the stock price went up. So most likely those activists are gone. All right. Anything else? Any other stocks? Again, I'm going to do more in the commodities again, and I'm upset at myself. Again, I mentioned corn earlier. I'm upset about myself about the corn futures. Called it. My indicators gave me the buy. Everything was there. Timing was off. And when I got kicked out of my option position, I just never went back. Should have went back. Really, so I'm going to share more on the option side than I did the last couple of weeks, but I'll do more of that. I think it was a tremendous opportunity in corn and soybean, but I really was pounding the table on corn, so I'll take a look at that. The other one I was pounding the table on, believe it or not, was I always thought the dollar was there was more weakness in the dollar. I just really did. I thought there'd be a bounce in it, but I thought the long term there'd be a weakness. So, and the dollar has pulled back. And in fact, I would be very surprised if there's a run in the dollar at all. All the economic signs are there for a weak dollar. A weak dollar actually would probably help the country. It won't help us in terms of our imports, but it definitely will help us in terms of our exports and selling more. So, and that's what you can expect. And the dollar definitely is weak, and I expect it to be even weaker. Ham, let's see. You have what here? Issue on a convertible note. Fundamental on fire. Insiders have not sold in IPO or SPO. Can the convert make it more volatile, but present fat upside? So here's the answer. First and foremost, I'm going to pull up the stock, FVRR. The next thing I'm going to say to you guys, I'm not sure how many of you guys know who Bill Gross is. Those of you know Bill Gross, I'm trying to remember the company now because he's with Capital Group. But Bill Gross was with PIMCO. Jeez, Mike, senior moment. Bill Gross was the chief bond trader analyst for PIMCO. The reason why I bring it up is Bill Gross was in graduate school at UCLA, wrote a paper that became very well known on the institutional side. And what Bill Gross wrote about was the arbitrage play between a convert and the underlying stock. So one of the things that you'll see now is that when these companies come out with convertibles, that the hedge funds can actually, let me see if I can get this right now. They'll take a position where they'll take a position between the stock and the convert, and they can lock in a guaranteed 8, 9, 10% return depending on what's going on. They can literally lock it in. Bill Gross wrote a paper on that. It's one of the things that made him famous when he got out of school, so forth and so on. So looking at FVRR, and to go back what you said, Ham, when there's a convert issue, it adds volatility to the stock. Now, the fact that you're telling me that this was an IPO and SPO, and you're telling me that the insiders did not sell any stock gets me really, really excited. I'm looking at a daily chart, and basically the stock, when it finally went through 39 and change, it just ran and ran and ran. How did I miss this? Favorite International. Okay, so it's an ADR. That's probably why I missed it. Not to say that's right, but it's an ADR. American Depository Receipt. So looking at this chart, near term, let's see, it spiked up to 2020, a little above 2020, came back and tested the bottom of that trading range, which looked like it's about 190, 195 in that range. Yeah, 190, 195. Tested that, and now it's bounced back up. It's in between a trading range. So I would expect if this market holds up, it holds up. I would expect it to challenge that 2020 high. Actually, it's 2024 to be the high. I would expect it to challenge that. If you decide to take a position in this, if I took a position in this, I'd probably have a stop on it just below the 190 number, 185. I'd probably have a stop around 185. The bottom of the old trading range was 193, 195. It's out of that range. I would expect it. So if I brought it here, looks like right now closed here at 210. You know, a 10% stop loss would be $21. So $21 off this would take you to 190 anyway. So I'm right around there, 190. I would buy it. If you're a trader, you could trade it in between this range. But for me, I'd look at it when it went through that 224 number on volume. And the stocks had some nice moves. And you're expecting earnings when? February. So you got a couple of weeks before earnings. Looks like on the earnings, the stock typically runs on earnings, ahead of earnings. Yeah, I'm looking at the chart. Yeah, you might see a little run on this stock before the earnings. Even when they actually missed or met expectations, the stock had a habit of running ahead of earnings. So I would expect it to get another run here. All right, let's see, anything else? I'm here for you guys. Come on, we got to make some money. So, Ham, I'm surprised, from now on, Ham, I expect time you see something like this, I expect you to actually send me a text message or something saying, hey, check out FVRR. One of the things I want to talk to you guys about, and I say this, and I'll keep saying it. When you find someone that thinks like you and is making money in the market, you don't have enough eyes and ears. So one of the things I suggest is you start forming teams, even if it's just somebody you can bounce ideas off of. Somebody just, text me and say, hey, did you see FVRR today? You'd be surprised. You can't see everything. So when you find somebody that knows what they're doing, that you like, and it doesn't mean that you don't make your own decisions. You just don't buy it because that person says, hey, I think it's a great buy. But when you find somebody that thinks like you and has a good eye for picking out stocks or other things, put them on your team. Share information with them. It's all about making money. And understand this. If I share with you every idea I'm doing, you and I still can't move the market, quote unquote. So I'm not worried about when I share an idea with you, I'm not worried about you buying it and you getting a better price to me. That's the furthest thing from my mind. All right. I'm more concerned with finding ideas. And there's a bunch of them out there. And as I said, we're going into earnings season. I got IPOs coming up, which I think are going to be a lot of IPOs coming. Who is it? Posh. Posh just filed to do an IPO. There's a couple other ones out there. Some pretty big names coming up. So I can't follow the IPO market, the commodity market, and then I'm following the earnings market. It's just a tough thing to do. And this is the reason why that Professor Milligan actually has two new members on my team. They're also actively involved in doing research. I'll try and get them on the call in the future. But I got two other guys on the team that are helping me now doing the same thing that I'm doing right now. And that is that we're searching around, looking for ideas, looking for trades, looking for things to put money in our pocket. Now, when it comes to what we do, we're more like the military. It's a hurry up and wait. So we're not, when I say looking for things to trade, I'm just not looking for trading ideas. I got to do my due diligence, go take a look at it. I don't believe that you have to trade every day. I don't believe that you have to trade all the time. I believe that you'll spend more time looking for the good things. So to give you a great example, I'm not sure how many of you guys follow baseball, but I try and consider myself the Rod Carew when it comes to this trading. Rod Carew is a Hall of Famer, batting average close to 300 or even over 300 from almost his whole career. I mean, just a great hitter. And the deal with Rod Carew was Rod Carew would only swing at pitches he liked. He had a distinct ability to foul off pitches whenever he wanted to. So he would stand at the plate, just foul off pitch after pitch after pitch he saw when he liked it, and he would hit it. Now, Rod Carew wasn't going for home runs. He was going for singles. But every now and then, a single turned into a double, turned into a triple, and he got a home run. But the guy got on base. That's what we got to do. We got to be Rod Carew. We got to foul off a lot of these bad stocks or bad ideas. And when we finally find one we like, then we go for it. Then we swing it for the fences. That's how you put up triple-digit returns. All right? How much upside do you have? There's a stock I looked at, which is case in point. I've been watching this stock since it went public. Let me give you the name of it so you can know. It's Montrose Environmental Group, MEG, Montrose Environmental Group. Stock went public and it ran. It went public and had a breakout from about $22 and ran from $22 to $30. But it took almost a whole month to run from $20 to $30. Now, why am I bringing it up? For me, yes, it worked short term, but for the amount of risk and return you got, $20 to $30, I guess, again, is not bad if you're on margin. But it took a long time. I don't have the patience, especially when these IPOs. I'm looking for them to make the move and make the move big. Now, the stock, it set a new high again. Very volatile stock, though. But the only reason I bring it up is, again, it's another one of these stocks that if you're going to take the shot, I want the reward. If I'm going to take the shot, I want the reward. Oh, well, come on. Don't do that to me. All right. Let's see. What else do I have? Why'd that open up? I don't know. Okay. So that's what's going on. That's where I'm at. Any other questions? Anything else? Anything? Let's go for it. All right. So again, going back to my membership, my partners and I will have a membership. You'll be able to come in, talk to us, directly to us. You'll be able to hear our ideas. I literally will show you what I'm doing as I'm doing it. Again, when it comes to Wall Street Wednesday, you're getting my ideas on Wednesday. What I did or what I'm looking at. Now, with our membership, you'll get ideas as they come, fresh. And like I said, I looked at two of them. I didn't buy the marijuana stock HYFM, but yeah, I didn't buy it. Can't play them all, and I missed that one. So it looks like that stock closed at 63 and change. Not bad. And that's what I'm talking about. Stock broke out at 60. And when it went through 60, when it went from 60, it went to 60 to 67, 64 in a heartbeat. And that's what I'm looking for. I'm looking for trades like that. All righty. A little bit out of breath. Been talking a lot. Anything else going on? Ham, anything good with you guys? Christian, anything going on? I don't see any questions here. I'm just looking through. Shopify. There was Shopify. Why am I? Bear with me. Oh. BILI. BILI. I can't even pronounce this name. Symbol's BILI. So you guys can go figure out how to pronounce the name of the company. But BILI was an IPO I traded early on. And the reason why I bring it up again is that these IPOs, let me hold on a second. I got to make the chart just a little small so I can get it all in here. These IPOs are really interesting. So this BILI was doing really well. And then it broke out from $50. And when it broke out from $50, it ran from $50 to $100, $105 virtually in a heartbeat. It's just really, really interesting. I watched it run the whole time. I wish I could tell you I purchased some. I did not purchase any. And again, this is me just telling you guys, it's just so hard when you're looking at so many things sometimes to do them all. And I'm looking at this thing, and it's just, it just ran. All right, so let me see. Paul, you had a question. Paul, you said when some of the IPOs break down that you get in, do you move on and not look back like AI? I move on. I always look back. Now, the reason why I look back is, and this BILI is a prime example, the reason why I look back and keep an eye on them is some of these companies are going to be really good companies, and even though they might have a short-term pullback, a consolidation, they can actually run further on in the future. So I do look. I do look back. Sometimes I'll buy them, but nothing's changed for me in that respect, and that is I only buy them when they break out. Only buy them when they break out through their highs. So the short answer is, and the other thing to answer you too, Paul, is, which I think I answered last time I was on, and that is you can never go wrong taking a profit. And sometimes I've had stocks, sometimes in my, not sometimes, a lot of times I'll look and say, look, I just need to print blank ink. That's my Rod Carew in me. Just putting money in my pocket. Just keep printing money and printing money. And what you'll find is when you start printing money and keep printing money, when those opportunities do come that you feel like you can take a chance and hold it a little longer, you will, because you've got enough profit that you've been booking to actually do that. So I do look at them. Tesla. Anybody that's ever been in class with me knows a couple of things. I've never traded Tesla. Never. And part of it is I just can't get behind the company. I'm not saying, don't get me wrong, there's a difference between the product and the company. I just can't get behind the company. I don't think your guy does a really good job running it. And so I'm just not a fan. Now, but yeah, it had a nice breakout. Let's see. Oh yeah, Christian, I got to do this at the two. I know you got work. And by the way, it's crazy out there. Let's see what else. So Christian's involved in some oil stocks, which is cool. The oil sector, rotation. Let's see. Paul said he got greedy in AI. I don't think you can ever get greedy, Paul. What happens is you just have no idea. The challenge is when these things run the way they run, you don't know if it's overextended. You don't know if it's just heavy buying and it's going to be a pause. You just don't know. So one of the things you can do, that's why I mentioned sometimes just not taking a profit's good enough. Now, believe it or not, I'm still long AI. Yeah, I know. I'm still long AI. Reason being is I got a great cost basis in it, and I didn't see any reason to rush out. Now, do I wish I'd have sold AI back up at the 170 level? Yeah. But at the same time, I've had plenty of stocks that I did sell, only to see them pull back and then run and go crazy. It's a tough game. The one thing I'll say to you is, no matter what you do, if you can, always book a profit. Even though you might not get at the high, if you can continuously take a profit, if you can continuously Rod Carew, you continuously just put the ball in play, eventually a home run will show up. But the main thing is keep the ball in play. So I can't argue with you sometimes if you take a profit, which you would seem too soon and the stock keeps running. It happens. But again, I'd rather take a profit too soon than let a profit turn into a loss, if that makes sense. All right. And this is the tough side of it. Yeah, have I taken profits on some of these IPO stocks or trades I have only to watch the stock just continue to run and run? The answer is yeah. As I lovingly put to you guys, I owned Amazon at the IPO level. I owned a couple thousand shares. And I remember in all my wisdom saying, wow, I got the whatever. I think whatever it was a nice return. I got 5-10 points in 1 to 2 days. In fact, I think I even held my Amazon long. So I think I got even a better return than that. But I did sell it. My wisdom. Who's going to buy books online? Everyone likes to go to the bookstore, get a cup of coffee, walk around and browse and read all these different books and magazines. I don't think Amazon is going to make it. So there it is. In my ultimate wisdom. Facebook, same thing. I made money on Facebook on the short side, shorting the IPO. I got IPO stock. Let me back up. I had IPO stock. Then I shorted it when it actually came down, was on the way down. Then I went long. But no, I didn't hold it as long. It just didn't hold it. Didn't look at it. And my list goes on and on. Alibaba is the same way. So as I always talk about, my strategy came out of the fact of I was getting anywhere from a couple thousand shares, maybe even more blocks of a couple thousand shares on hot IPOs, to at one point I was lucky if I was getting 100 shares of a hot IPO. And that's how I ended up developing this IPO strategy, because I had been trading them in the aftermarket. So I had to learn. So I just basically took what I was doing in the aftermarket, just realizing I wasn't getting any deal stock. And that's how this works. But again, and there's no such thing as you got greedy. You just don't know. You just don't know. Because the other thing is you could have got scared and brought the stock at 120 and sold it at 130. So no one knows. The only person that's going to tell you that you should have did this or should have did that is the person who's never traded before and has no idea exactly how this works and doesn't understand that no one knows where the top is and where the bottom is. So all I say to you, Paul, like me, is, all right, cool. Make your money and then move on to the next deal. You can keep watching the stock. Again, you keep track of the hot ones that really worked for you. I know I talked about this, but Alibaba, I talked about it. Alibaba was priced, ran up, pulled back. I brought some out. So I had some Alibaba IPO stock. Then I brought some Alibaba in the aftermarket, and it ran to, I think it was a 120, and then basically pulled back. Took my profit. Wasn't as much as I once had at 120, but took my profit. And Alibaba took almost 2 years to get back through 120. But when it went through 120, Paul, after 2 years, it went from 120 to 160, 170 in a heartbeat. And what's interesting is when the stock went through 120, one of my former trading students, somebody who I taught trading to, when it went through that 120 2 years later, I got an email. Was it email or phone call from him saying, and he wasn't, he was my actually, we went to college together at University of Florida. And he said to me, he said, Mike, did you see Alibaba just went through 120? I said, yes, I did. And at the end of that conversation, I said to him, I said, look, Mark, I trained you well. You understand this. And Mark brought the stock at 120 and we rode it to 170, made a quick little profit on that. So all I'm saying to you guys is that it's okay to take profits. It's okay to cut your losses. It's okay. The one good thing about what we're doing is another train coming. And the only way that you can participate on and get on this train is you got to have some capital. So being conservative in terms of your money, how can I put this? Your trading might be aggressive, but you got to protect your capital. You got to protect your capital. And what is this? Alibaba's hurting right now. Got it before the huge dump. Was hoping to cut losses after they run yesterday, but there's speculation it might be delisted and Jack Mayer is missing. Yeah, I mean, we got that whole thing going on with President Trump and delisting of these Chinese companies and so forth. And I can't answer to you. Again, you brought Alibaba for your own reasons, so I'm not sure why you brought it. So I can't get into that. All I know is one of the things I always tell you guys is the reason why you buy a stock is the same reason why you sell a stock. So if you didn't have a reason why you brought it, and I'm looking at the chart and it's interesting. Yeah, it's interesting. So Alibaba went through, it was actually, the number was 118. It hit 118 November 14th. Excuse me, November 2014. And it finally went back through that number in May 2017. All right. That's what I'm looking at on Alibaba. So all I'm saying to you guys is that great companies will come back. They will come back. I don't know when they come back. Just be patient. I always do watch them. I try and keep them. One day if I show you my stock watch right now, my watch list has on it about 60 stocks I'm trying to keep an eye on. Some of my IPO stocks that just came public. Some of them are long-term holds, companies I think are, the Apples of the world, the Facebooks, the Microsofts, the good companies. I've got those on there too. All right, let's see. Any other questions? I'm really excited, guys. I think, as I was saying, when you form your team, when you get on this membership and you get this team thing going, and you start getting these alerts, these contacts, this information, the ability to ask questions during the week and not just on Wednesday. I think that it actually put money in your pocket. The goal here is to put money in your pocket. Your goal is to build a team. Yes, I know that you can actually turn the machine on and you need no one's help, but the other side of the coin is you only have two eyes. You only have two eyes. If you can form together a team, I heard from a young man, I haven't talked to him in years. My wife talked to him. I heard from a young man that what he did was he and his friends pooled a whole bunch of money together and they started trading, and he was able to actually put an extra $10,000 profit in his pocket. So he didn't have enough money to do it by himself, so he put together with him and some of his buddies, and they went out there and they started trading and investing, and they put some money in their pocket. Young man, finance major, just got out of college, so he did pretty well for himself. So as long as I mention that to you is I'm always a believer in if you can find other like minds that think like you that can give you ideas and suggestions, go with it. I wish I could lovingly tell you that all these came out of my mind, but they're not. I get emails just like when Ham gave me that I forgot that quick, Ham. I'm looking for it now. That FVRR. Don't know how I missed that one. I missed it though. Yeah, from $40 to $400 to $220, basically in what? Since May of last year, from May to today. So you're basically talking about 7 months, and your stock goes from $40 to $220. Yeah, I missed it. It happens. Ham, I should go back in the transcript and change your grade for you not sharing this with me when it was actually at $40 a share. All right, let's see. Any other questions of me? I'm excited. I think we make money. We need this market to hold up. Yeah, interest rates are, bond prices have gone down a little bit. Interest rates are up a little bit. They're still extremely, extremely low. I don't foresee them going much higher anytime soon. The Fed's already come out and basically stated they're going to keep rates at 0% indefinitely. Another thing that we know is that when interest rates are at this, so make sure you understand, there's a disconnect between the market and the economy. Yes, we know that. The other thing I'm going to say is, I'll get to that question in a second. The other thing I'm going to say is there's a disconnect, and the stock market is not the economy is not the stock market. So yes, the economy is going to have some problems that need to be fixed over the next year. With interest rates as low as they are, the only game in town for the average person to actually outperform inflation is really the stock market. It's the only liquid game in town. Now, don't get me wrong, real estate's there. You can trade commodities, you can trade, you can talk about different securities, but the bottom line is the stock market or the markets per se are the only way you're going to outperform inflation. The other thing I'll say to you is use this and look at this as a way of a second job, a second income. All right. The only difference is keep the money, keep compounding the money, and keep letting it grow. I'm not hoping, I should have the membership up and running in the next 2 to 3 weeks. I was on the phone this morning with my IT guy. So I was on the phone with him. So I'm getting that worked out. I've got another conference call with my 2 partners on Friday. Now, don't get me wrong, my partners are doing work too. So we're putting everything together. We're hoping to have this up in the next 2 to 3 weeks, if not sooner. And the reason being is because, like I said, I think this market's going to heat up. Now, you had a bunch of deals come. You have a bunch of IPOs coming this week, but they're not IPOs. They're the blank checks, the SPACs. So you got a bunch of those coming. You had some earlier this week. I think there was 10 deals on slate to come tonight, these blank checks. But they're there. And then there's 2 biotech companies going public in the next day or two. One's out of the U.S., $17, $19 range. Morgan Stanley is the lead. So, the calendar's going to pick up again. And what's interesting, these biotechs, I don't like them, but how can I put this? My isms are not your isms. So what I mean by that is just because I don't like them does not mean you can't make money in them. And the reason why I don't like them, just so you know, is I have a hard time investing in anything I just don't understand. And when I start reading the prospectus on some of these biotechs in terms of what they do and the drug and this and that, my head starts to spin. It's never been my area. So my head starts to spin, and when my head starts to spin, the old saying, a confused mind always says no. And so when I start to read about what they do and how their business runs, I get not how the business, but what kind of drugs they do and what the drugs are used for. And the thing that you got to look at when you look at these biotechs, okay, good. You're developing this drug. Then the next question you got to ask yourself, if this drug is approved, how big a market is there for this drug? Now, if it's an orphan drug means that the number of people that it's going to actually reach or help is so small that's not going to really add any revenue to the corporation, and is no interest. So, that's one of the things that you look at, and how big the market potential is. How much potential can they have? Are they the only player? So those are some of the things, and I just can't wrap my head around enough of that. You really need somebody that understands the industry, and I just don't. So I will come out with, and I have in the past traded some. I'm looking at one. In fact, this one was a cancer drug. Symbols ALXO. Let me see if I can give you the name. The name is ALX Oncology, cancer drug. I've been watching this thing for several weeks, and the stock broke out and went from $44 a share to $90 a share. And what was that then? 1, 2, 3, about 5 weeks? Yep. And I watched it the whole time, watched it go the whole time, and didn't do a thing with it. Just not what I do. So it was, again, stay in your lane, know what you do. So anyway, a confused mind says no. And if I'd have brought this biotech or this cancer drug, even, it ran, but it had a slight pullback in there. Knowing me, because I don't like these and I get nervous and I don't understand, when it had a slight pullback, I probably would have got out and before my stop even got hit. That's just me. So anyway, that's what's going on with that. All right. Any other questions of me? I'm going to wrap this up. Believe it or not, I'm going to wrap it up because I actually want to go look at the news and see what's going on in our politics here. It's crazy. Like I said earlier, whether you're Democrat or Republican, doesn't matter. Today was just a bad day for democracy and a bad day for the U.S. citizens. It's just not good. We're acting like a third world country in terms of what's going on. It's just not good. Like I said, I don't care what party you belong to. As an American, this should upset you, and it's upsetting just to see this. All right, let's see what else. All right, Paul McConnell gone. Dems gonna pump stimulus. Dems have full control. Great for the market. By the way, Paul, you're correct. Contrary to what they keep saying, I don't know why they keep saying this. Anyone that's ever done any studying and looking, the stock markets do better under Democratic presidents than they ever done under Republican presidents. Republican presidents might be pro-business. I don't know what's going on with that in terms of, but the market does better under Democrats. And part of the reason is that Democrats typically spend more money. The other thing about Republicans too is, again, I'm not getting into politics on this. Republicans might be good for big business, but Republicans typically come out. In my lifetime, and for those who don't know, I'll finally admit it, I am years old. Every Republican president in my lifetime has led to a recession. We've had a recession in every Republican president we've ever had in my lifetime. So I think the market's going to run. I think the market's going to be bullish. Again, I gave you a couple of economic indicators why in terms of low interest rates, only game in town, where you're going to put the money, so forth and so on. But I think it's the game in town. For those of you who don't want to be aggressive traders, don't get me wrong. You can use this strategy and do a buy hold. As I mentioned to you, I'm still long AI. I got a great price on it. Believe it or not, I'm still long United Software. I'm still long some of these stocks. I took a profit in Snowflake. Snowflake. I'm just trying to look what else. I'm still long Corsair, CRSR. Still long. All right. I don't remember what my cost basis is, but I got it at a great price. I went and checked it today. I'm down here somewhere in the low 20s in the stock, even though with the pullbacks, went to 52, but still with the pullback. So I'm still long that. I'm giving it time to work. Now, don't get me wrong. As I said earlier, if I need to raise cash to go to other places, I have no problem taking profits and moving my loss. taking profits and moving on. So that's my thoughts. That's what we're doing. I appreciate you guys. Again, if you have any questions, any issues, any concerns, feel free to hit me up. I'm going to jump off now and go and, like I said, turn the news back on and see what's going on. That's, it's just history in the making. All right, guys, have a great one. I'm going to sign off. I do appreciate all you guys for coming. Thank you so much. And again, let's make some money. Let's put some money in our pocket. I think we're going to have a great year. I know I'm going to have a great year. I can't tell you what my expectations are, but the one thing I will tell you is, again, I'm looking for triple digits in my portfolio. So I will tell you that. I'm looking for triple digits. I think it's very achievable. All right, I'm out. Appreciate you.